Frank Cappelleri, founder and president of CappThesis, is joining me now. Good morning, Frank.
Hi, Trini. How are you?
I'm great. Thanks for joining us on the show this morning. Now, the S&P 500 has reached your 6,100 price target. What needs to happen for the index to maintain its uptrend, and how should investors approach it from here?
Obviously, a great question. And I also get asked a lot, how did we get here? And the answer to both questions is actually the same. And so this has been really a series of breakouts from a smaller basis too. So even before getting to 6,100, the S&P 500 has achieved 10 different price targets all along the way. And all that means is we had digestive phases along the way, right? And they have gotten resolved to the upside more often than not. Now, eventually, at some point, digestive phases will form bearish patterns. We'll see downside targets hit. But we can't jump the gun with that because it hasn't happened. And we can go back to 2022, we know how that looks and feels, but all on the way up to 2021, we had to wait for something to change. So a market character change would be seeing, one of these consolidation periods actually see a downside break. And when that happens, it typically happens quickly as well. But I think we have to be patient because we've seen what's been going on over the last 2 years. It's been an uptrend. Uptrends are created by successful bullish patterns happening.
And Frank, only 3 sectors are positive this month: consumer, discretionary, communication services, as well as tech. What needs to change for other sectors to find demand and support broader market strength?
Well, if you look at the sectors that are up, of course, they're the large cap growth areas. And so, it gets a lot of attention, especially when all of the biggest names are making new highs. And it seems like it's been happening all the time. But if you look at it closely, this 2-year bull market, yes, it's been led by tech, but the bedrock of this has been rotation. When those areas have started to come down a bit, then that's when we see rotation back into, say, financials, industrials, and that really needs to happen again. So as we know, Trinity, the S&P 500 has had negative breadth every day so far in December, but those breadth numbers haven't been too severe. So at some point, I think you will see rotation back into these other areas, which really needs to happen for this market to continue higher.
And December has historically been a strong month for markets. What do you believe is the biggest thing behind the recent pullback? And do you believe that this will continue to persist?
I just think it's a natural cause of events when you have the market get too extended, say, on the short term. We look at this, over the S&P 500, we can put a trading channel on the price action going back to the August lows. And all along the way, it's kind of oscillated in between extremely on the high point and the low point. And so it got a little higher. And so I think this, for the most part, we're seeing a normal pullback. And I wouldn't be surprised at all, again, to see the other sectors that have been lagging and eventually get a bid, which will then support the rotation theory and have the market potentially finish near its highs again toward the end of the year.
Now, utilities, energy, and materials have really been hit hard in December, down over 5%. Do you see this as a buying opportunity or a sign of broader weakness?
I do think it's a buying opportunity. I think utilities is a very interesting one, of course, because it was leading for most of the year. So came into December up 31%, now down 6%. And if you look at the XLU ETF and some of its components, kind of right near some key trend lines and previous areas that I broke out from. So again, if this buy the dip mentality is with us, I think investors will be looking to other areas that are not extended, that have come in right now. And again, getting back to the rotation theme, I think now is a key area or a key time for that to happen again.
I do want to go back to your point about ETF. So the financial ETF has avoided breakdowns multiple times this year, but is now showing another bearish pattern. What would signal a rotation into this sector, and how critical is it to the overall market health?
Very critical, of course, one of the biggest sectors underneath technology. And again, going back to over the last number of months, it's formed pretty clear bearish formations on a multi-week basis. And we've seen XLF attempt to break down from there, but every time that was about to occur, that's when buying came back in. And so if you look at what's happened now since the spike after the election, same type of thing. It's been kind of moving back and forth. It has shaped another head and shoulders bearish pattern. But I think, again, that's set up for the market to eventually take advantage of that, and that could turn into a bear trap with new highs to follow right after.
And Nvidia is showing a similar pattern to last fall before its explosive rally. Do you see a repeat of that move, or are the current conditions signaling a different outcome?
Well, first we understand that it's not apples to apples, right? We're up 245% since the last time that bearish pattern failed in October of last year. At the same time, we can see that NVIDIA, again, amazing run, but it's had some multi-month consolidation phases along the way. Each one of those has been taken advantage of. So I wouldn't recommend shorting NVIDIA or something like that because of the way it looks. And I do think it has the ability, again, to have demand come back into it and become a leader. And that's important as well, because if you think about large cap growth, it's been leading, but semiconductors have lagged. So a big part of the market of technology has not even participated in this advance we've seen with large cap growth. So if there's going to be a rotation, there could be a rotation within technology as well, back into the semiconductors, and that could really provide what we need for another up leg to take hold relatively soon.
Now, Frank, we have about 45 seconds left here. I do want to get your take on, as we close out this year, what do you see as the biggest risks and opportunities as we go into 2025?
Well, I think just understanding that this is 2 years worth, two 20% years in a row. So the question is, will the market run out of steam? Right. And of course, we have a new administration coming in as well. So there's, of course, always uncertainty. But at the same time, from a price action perspective, I think we have to look at it the same way. Are the trends still in place? Are these consolidation phases that we're seeing taking advantage of the way they should? If not, then of course, we'll have to be on guard for a potential rollover, and the next volatility event may not be as viable as we've seen in the past. And I think all that will reveal itself as the new year begins.
A lot of key takeaways there, as always. Thank you so much, Frank Cappelleri. He's the founder and president of CappThesis. Thanks for joining us.
Thank you, Jeremy.